25 bull bar, but possible double bottom, so really not a great sell. And then we got consecutive bull bars, 25, 26, good for the bulls. Probably going to go at least a little bit higher. 27, doji, and by the time you see 27, it's becoming pretty clear that most of the overall day is in a trading range. We had bar 1, and then a reversal, big sell-off, big reversal, big sell-off, big reversal. Clearly, we're in breakout mode. 28, bull breakout, and getting near the highs of 21, and we're forming a micro channel, 24, 28, which is good for the bulls. Which is good for the bulls and increases the odds that we get a second leg. 29, doji, probably buyers below. Possible double top with 21 and 29, but I suspect we're probably going to pull back. But even if we do pull back, this will probably not be a successful double top. Outside up 30, but overlap increase the odds of a pullback soon. And then 31, bear bar closing on its low, probably going to go at least a little bit lower. Always in bears, probably get out below 31 and look to buy lower. 32, strong enough bear bar, good for the bears. I suspect we're probably 32, strong enough bear bar that I suspect we're probably going at least a little bit lower. And then 33, reversal bar, good for the bulls, increases the odds that we're probably going to go at least a little bit higher. 34, follow through for the bulls, but possible double top. 31, 34, but I suspect we're probably going to get at least a second leg up. And then we got the surprise on 35, good for the bulls, breaking out of the triangle, probably going to go at least a little bit higher. 36, follow through, but the follow through has a tail above the bar and it's possible second leg trap, rally to 30, pull back, second leg up, 32. And then 37, reversal bar, good for the bears, increases the odds that we're going to pull back. But I suspect that there was probably bulls somewhere below, but 37 is enough of a surprise. We're probably going to have to pull back and get at least a second leg down. 38, testing the low of 32, probably buyers in that general area, and we're bouncing big up, big down. This increases the chances that we're going to find more. This increases the chances that we're going to have more sideways trading. Doji, 39, but probably sellers above and at least small second leg down. 40, doji, 41, doji. Not a lot of urgency, but we're forming a micro channel down, and that reduces the probability for the bulls slightly. 42, almost outside down. Good for the bears. We may go a little bit lower, but not a strong area to sell. You're selling near the bottom of what could be a trading range. Doji 43, strong enough breakout 42, so we may get a second leg down. And that's what happened with 44. But we're getting bear bars and pauses. Bear bars, we're probably going to get a pause. And we got a reversal up 45. Reversal up 45, good for the bulls, but tight bear channel. Therefore, there might be more traders selling above. And then 46, we tried to get the bear breakout, but it failed to close on its low. And that increases the chances that there's buyers below scaling in lower. And you can see that's what happened over the next several bars. 47, 48, always in bears getting out and probably going to get at least a second. Always in bears get out, bulls can buy, expecting a second leg, but tight bear channel, buying in the middle of the range, pullbacks could be deep, and that's what happened with 49 and 50. 49 tried to get the reversal, but they failed, and the market ended up going sideways for 3 bars and reversing back up on 54. 54 or 53. 53 strong enough bar, probably going to go at least a little bit higher. And the bulls, they got followed through 54. And you can see the market ultimately just formed a tight trading range and reversed down on 59 and 60. 60 consecutive bear bars may go a little bit lower. And then we sold off, forming a parabolic wedge, 59, 60, 61, and getting the reversal up on 62. At this point, it's really not worth doing much of anything here. And you can see what happened. We basically just went sideways to down in the overall range for the rest of the day. 63 reversal down, good for the bears, but ultimately it got a second leg down, but it got a deep pullback first. And then we ended up forming a channel with lots of buying pressure and bulls buying below bars with limit orders. So pretty much for the entire day, it was more of a limit order market than a stop order market, especially as the day grew on. It became a harder and harder, more and more difficult day to trade if you're trading with stop orders. For stop orders, you can argue selling below 6, but again, not ideal. Bears, if they sell above 6, they probably get out above 12, but I think it's hard to stay short on 8, 9, and 10. Bulls, if they buy above 12, what do they do with 15 or 16? They probably get out as 16 reverses down or below 15. 18, reversal bar, closing on its high. Good for the bulls. Increases the odds. 18, it's a reasonable buy, but after this many bars down, it's probably minor, so bulls, they can buy 18, but they probably get out below the 22 low. And then bears, if they sell, they have to get out somewhere in here. So fairly difficult overall trading. 25, 26, reversal bar, good for the bulls, increases the odds that there's probably buyers below and we'll get a second leg up. So it's okay to buy in here, but I think it's reasonable to get out below 31 and then tough to buy above 33 or 34. But if the bulls do, they probably get out below 37. Bears, if they're short, they probably have to get out, maybe above 45, definitely above 47. And then I think it's not really ideal to sell below 49. Bulls, if they're long, they can probably get out below 58 or during 59. And then I think it's really, really tough to do stop entries in here and probably not worth doing. Limit orders, I thought probably sellers above 9, but a tough trade, bottom of a trading range. And then I thought buyers below 10 and the 8 low. I thought buyers below the 16 low during 17 scaling and lower. I thought probably sellers around the breakout point here, but again, not an easy trade to do. And then buyers on the first reversal down, but tough to buy on a bar like 31 closing on its low. And then probably buyers below 45. I thought that was okay. I thought buyers below 48. I thought buyers below 50 and then sellers above. That's okay, but tough to do. And then all through here, if you're really aggressive, it's limit order trades back and forth. But the range was getting fairly small and probably not worth doing. Buy the close, sell the close. There's not really any decent buy the close, sell the close today. Maybe buy the close on 26, but really not ideal. Sell the close 7. Again, I don't think it's all that great. And I don't think it's really worth buy the close, sell the close anywhere in here. If you're really quick, maybe buy the close 35, but 36 could have been a bear reversal bar. So it's still rather tough argument for buy the close, sell the close. Let me take a look at questions. What do I think about tomorrow? I think that it's bad low 1 and there's probably buyers below, but it's possible this is a breakout pullback sell. And so the bears are hoping that we can get a strong reversal down and test closer to the moving average, but the bears need to do more than just this. So can you explain the logic of why price returns to open and closes? Well, price gets snapped back to the average or the mean. And the reason for that is there's all sorts of reasons. One, I think it's in part, you have traders that are selling and price goes down to support or what they think is support and they start buying back their shorts. And you also have a bulls who, instead of buying, you have traders expecting breakout points to get tested. They expect the 5 low to later get tested. They expect the 9 low and the 10 low to later get tested after 11. And vice versa, the bears selling below 10. They know that the breakout point is going to get retested. And what that causes is it causes bears to sell and scalp out of shorts. And it causes bulls to buy, betting on retracement back to the breakout point. And that's pretty much why that happens. It's traders scalping back and forth. So really, not all that much to talk about on a day like today. It's pretty much tight trading range day, and most days aren't going to be like this. And tomorrow we'll probably have some sort of volatility expansion. So we'll probably have some sort of breakout. Give me just one. Let me wait for a few more questions and then I'll wrap it up. Why do the bulls and the bears expect test? It's pretty much the same reason I mentioned. It's traders scalping in and out of trades, causing breakout points to get retested. Bulls buy, scaling lower. They make money during the 13 rally. Bears sell, scaling higher, and they make money during the 17 sell-off. That's pretty much the logic. All right, so thanks everyone for watching, and I hope everyone has a great rest of their day.